Getting a bad credit mortgage can seem confusing. Where do I start? Who do I speak to? And what do I do? While it might seem challenging, there are things that you can do to prepare yourself. So, with that being said, let's take a look at the 5 steps you must take before applying for a bad credit mortgage. Hi there and welcome to the Bad Credit Mortgage channel. If you're struggling with bad credit and you're feeling overwhelmed by the mortgage process, you're in the right place. So without further ado, here are the 5 steps that you must take before applying for a bad credit mortgage. Number 1, download a copy of your credit report. Although it can be confronting, before you can make a plan and hope to succeed, you must know where you stand as things are today. You may have heard us talk about what a credit report is on a previous video, but in case you don't know, your credit report is something that provides an insight into your creditworthiness. It also includes information on things such as your credit history, outstanding debts, payment habits, and other financial data. There are 3 main companies that issue credit reports in the UK, and they are Experian, Equifax, and TransUnion. There is a service called Check My File that combines all 3 credit reports into one. I would highly recommend checking this out. There is a link to a free trial in the description below. Once you've downloaded a copy of your credit report, it's really important that you review this for any errors and inaccuracies or anything negative that has been recorded that you weren't aware of. Identifying these issues early can help you address them and put them right, and it can also help improve your chances of being approved for a mortgage in the future. Number 2, understand where your finances are and tidy these up. It's crucial to have a firm grasp on your finances, so take some time to assess your income and your expenditure. A good starting place would be by filling in a simple budget planner. This will show you how much money you've got left at the end of each month. Alternatively, it will show you if you're spending more money than what you've got coming in. Budgeting is key here. Cut any unnecessary costs and look at ways that you can increase your monthly savings. Tidying up your finances will improve your chances of mortgage approval. And the reason for this is that all mortgage lenders will want to see how much money that you've got left over at the end of each month. This also gives an indication of how well you're managing your finances and how affordable the future mortgage will be. Number 3, find out how much you can borrow and what deposit you will need. I would recommend speaking to a mortgage advisor who specialises in arranging bad credit mortgages. They will help you identify exactly how much you can borrow and how much deposit you're likely to need. This will also help avoid the situation occurring of getting your heart set on a home that you ultimately can't afford. Number 4, identify how much houses cost in your area. Once you have an understanding of how much money you can borrow and how much deposit you're going to need, you can then understand how much you can buy for. This is calculated by adding your mortgage amount to the deposit amount, which equals the potential purchase price. For example, if you can borrow £180,000 and you're going to need a deposit of £20,000, you can look at properties in the region of £200,000. With this information, you can input this into sites such as Rightmove and Zoopla and key in the information, including your potential purchase price. This will bring up a list of potential properties that you can buy and afford in your local area. Number 5, save up a deposit and find your new home. This is the last point that we're going to discuss today, so it's important to remember that your deposit can also come from a source other than savings. For example, it can be a gift from a family member or it can be some inheritance. Once you've got your deposit together, it's time to get back in touch with your mortgage advisor who will arrange something called an agreement in principle for you. A decision in principle is a provisional offer made to you by a mortgage lender, usually in the form of a certificate, and is something that's given to you after your income and expenditure has been assessed alongside your credit history. Once you've got your agreement in principle, that's when the fun starts and you can officially start looking for your new home. And there you have it. Those are the 5 steps you must take before applying for a bad credit mortgage. And although it can be overwhelming, with hard work and thorough preparation, you can navigate the process successfully. If you have any questions or any ideas of videos that you'd like to see, please feel free to put them in the comments below. So, thanks for watching. Please make sure that you hit the subscribe button and turn on the notifications for more tips on all things bad credit, and bad credit mortgage related, and we'll see you in the next video.